Big changes are coming to your 2025 taxes being filed in 2026. The One Big Beautiful Bill Act has implemented brand new tax laws that we need to walk through. This includes everything from an exclusion of overtime income, tip income, a brand new senior deduction, car interest loan deduction, and a quadrupled limit of $40,000 for state and local taxes. Now, the bill is composed of rules that apply to the 2025 tax year and then some that don't start until the 2026 tax year, like new rules on charitable contributions. So in this video, we're only focusing on rules that apply starting the 2025 tax year. One of the biggest changes in the One Big Beautiful Bill Act is the brand new no tax on overtime deduction. So let's consider an example. Overtime is paid at 1.5 times your normal rate. So the extra half that you're paid is now non-taxable. So let's imagine you work 10 hours of overtime at 1.5 pay. Your regular rate is $40 an hour, so your overtime rate is $60 an hour. So you're paid $600. So the extra $20 difference between your normal pay and the $60 an hour pay is now deductible. So you have only $400 that's taxable, which is your normal 1 times pay, and the extra $200 is now deductible. Now this deduction does have its limits. You can only deduct up to $12,500 for single or $25,000 if married. And it starts phasing out once your AGI reaches $150,000 single or $300,000 married. And next up on the tax bill is the brand new no tax on tips deduction. This is a major change for millions of people in the service industry. So how does it work? You can take up to $25,000 of your tips in that year tax-free. And you only start to phase out of it once you reach $150,000 of AGI single or $300,000 married. So to take away the confusion of all of these new tax rules, I've created a free PDF summary guide with everything you need to know. You can find it in my comment section. Now, for the first time, you'll be able to deduct the interest you pay for your car loan. This all depends on where the final assembly of your car is. So if you qualify, you can deduct up to $10,000 of car loan interest. And you start to phase out with AGI of $100,000 single or $200,000 married. Now you have to pay close attention to the requirements. The vehicle must have its final assembly in the US, so it could be partially assembled in other countries. This must be a new vehicle. It must be a loan that originates in 2025 or after. It must be a vehicle for personal use and not for business use. And you're going to have to report your VIN number on your tax return. Now, don't assume a certain car qualifies based on the brand alone. For example, a Toyota Camry is typically assembled in the US, but a Corolla is typically assembled outside the US. Next up is a major tax break aimed to help retirees. This is called the senior deduction. If you are 65 or above, you can now take an additional $6,000 senior deduction. And this starts to phase out at $75,000 of AGI or $150,000 married. So if you are filing a married return and you're both 65 or above, you will get $12,000 of the senior deduction. The next major change in this tax bill is the increase to the limit on the state and local tax deduction. This only applies to those that are taking itemized deductions. So previously, these taxes were capped at $10,000, and now they're increased fourfold all the way to $40,000. This is a major change for those that live in high tax states such as California and New York.